Bryce, thank you very much for joining us here at Energy Live News. Tell us a little bit about yourself, first of all, and your company.
Sure. I'm founder, CEO of LevelTen Energy. We're about a 3-year-old venture-backed firm based in Seattle, Washington. I've been in renewables for almost 20 years now. Seems funny to say. But started off at the Bonneville Environmental Foundation, where the first REC transaction was done, and started my own project development shop. And as a developer, we started selling power to corporates. Did the first offsite solar PPA in the United States.
Yeah.
What a great idea! Companies buying power from new utility scale projects, but it became clear pretty quickly how rough that transaction was and how difficult it was. And we figured, we could use software to make that process easier, more transparent, safer, faster. So started LevelTen, which is an online marketplace and transaction platform to bring software to this process, to make better matches between companies and projects, help buyers get into better and safer transactions, and help smaller buyers participate in this market as well.
How does the platform work? So what are you putting together? Have you got energy assets, say a solar farm or a wind farm, and then you have got people nearby or wherever distance they are, you've got a platform where they can go, actually, what is generated there is the one I'd like to buy, and the power I have, we call it here in the UK, we call them prosumers, terrible term, but producer consumers, so they can pay back and put energy back into the grid and trade that way. Explain how your system works and who are you connecting to whom?
Sure. So every marketplace, no matter who you're bringing together, benefits from transparency. And in the renewable space and in the utility scale renewable space, that means if you're a buyer, you need to be able to see what all your options are. You need to be able to see every single project under development. So, in North America, that means we have almost 1,000 renewable assets, primarily wind and solar, and increasingly storage under development at any given time. You've got projects dying every day, new projects being born. But as a buyer, that means you can log on, you can see every project under development and access analytics that tell you, if I were to buy power from this project, if I were to sign a 10, 12, 15-year PPA, based on what may happen to power prices, based on the production shape of this project, based on where it's located, what might that contract be worth to me? And how volatile might those results be, so I can think about the risk of that contract, and how do I compare that contract to the hundreds and hundreds of other contracts that developers want to sell me. So it's about transparency, and it's about advanced analytics, and it's about just helping buyers make smarter decisions.
Sorry to interrupt. So if I go onto it and I see that there's a solar farm and they can give me, I don't know, 2 gigawatts of generation or whatever, and they can guarantee me a certain thing. The issue about PPAs, and it's funny because they were very, very commonplace literally over 2-3 years ago over here in the UK, is because of uncertainty. CEOs may want to do it, then the FD says, hey, hang on a second, you can't sign up for 15 years. So a lot of this is now going from a shorter time scale. And how short can that PPA be for it to be fundamentally financially viable for both parties, well, all three parties, because you're the trading platform as well? Do you see where I'm coming from? To get someone to say, I'll sign a 10-year deal, possible. 15, 25, that's really pushing it.
Yeah, and it used to be if you wanted to make a new project happen, it had to be a 25-year contract.
Absolutely.
Or a 20-year contract. And now, it's 15 and maybe 12 and maybe 10 on some occasions. But if, as a company, you've decided you want to buy from a project that is unbuilt, your commitment to buying that power will help that project get financed and built. It's exceedingly difficult to go beneath 10 years at the moment. Now, over time, especially as investment tax credit, production tax credit, those kind of federal incentives in North America roll off, we may see those terms drop below 10 years. But It's very hard to go below 10 years, which is significantly better than 25.
No, of course. So that precludes, in general, smaller companies. So smaller companies don't know how long they're going to be in business for a start. You know, big giants can say we've got a projected return for the next 10 years and we'll make the investment. Your idea is to offer what big giants that we've seen, like the Googles and Amazons and huge brands around the world, they already do this. They already platform. Every week we get a story, a press release about how green they're all going. You said at the beginning of this, the idea is to allow smaller players to participate. How can they with this 10-year time frame issue?
Yeah, and I mean it depends very much on how we define smaller, right? And if we define smaller as smaller than Google and Microsoft and Amazon, there's a very long tail of small there. We think about it in terms of tiers. You've got your tier one buyers, which are your Microsofts and your Amazons and your Apples, etc. And then you've got tier two buyers, which may be large entities. Let's say it's Starbucks, but they don't have 20 people working on energy full time every single day. And then you've got tier three, which can include a very long tail of buyers. The first challenge is to get those tier two buyers into contracts, and then we can work on the tier three long tail over time. But even the tier two buyers, who generally are large, sophisticated entities, have had trouble breaking into this market in the same way that very large tech companies with massive balance sheets have been able to do.
What are you offering then? What's the difference? Because there might be loads of people who think this is a great idea. What makes LevelTen's offering different to what else is out there?
Well, again, back to what makes a good marketplace, whether you're connecting buyers and sellers of shoes or buyers and sellers of energy contracts. Transparency and standards. So allowing buyers to see everything, to properly understand it, because these are wholesale energy markets and they're complicated. Price doesn't equal value. And then to build standards, contractually, so buyers don't have to spend 18 months negotiating a contract, coming up with terms and conditions from scratch. As a marketplace, we know what is not only what is fair and reasonable for a buyer, but what is financeable for a project. None of this works if someone doesn't finance that project because they look at the contract and say, these terms are out of market.
Sure.
So creating those transaction standards so buyers can look at their options, know what they're looking at, and execute on those with ease is really the objective.
Would you say the majority of what your platform is trying to do is find, you could call them off-plan projects? So these are things that are in planning or partially up, not come to full capacity. So that's where you're really targeting.
Yeah, well, and we target that not not because that is the only market or that's the way it will be forever, but because that is what corporates want at the moment. For the most part, they want the additionality that comes with making a new project happen. Now, I think over time we will see that change as projects that were built 3 years ago and 5 years ago begin to roll off their initial contracts and then go merchant and have lots of power to sell. I think over time we will see corporates buying some power from new unbuilt projects and some power from merchant projects. Over time, we will certainly have to accommodate that merchant power from those assets. It's silly to tear those assets down and build new ones, right? That doesn't make sense. But at the moment, companies, I think, rightfully care a lot about making new projects happen, and so that's primarily what we facilitate.
Do they ever own these assets? So when you do the agreement, are they just agreeing to take the power from this, or do they actually have a percentage stake in the asset they fund?
They rarely own the assets. On occasion they do, but that's really a different equation. Involves treasury and a whole bunch of other functions within those companies. It's a separate decision. 9 times out of 10, companies do not own the assets.
You're in Trump's America, and the president's obviously been kicking on about the sort of, you could call it the clean versus dirty, and he calls it the financial against the unfinancial. America's a funny case because, just recently I was in California and I passed oil fields, followed by enormous solar farm, followed by enormous wind farm. And then, there's a big push for actually having both going on at the same time, but it's still overwhelmingly an oil and gas sort of country. What's the demand for this? Is it just the, dare I say, elite liberal companies that want to invest in this? Or do you see this as actually a marketplace that is growing in America, despite the current administration's concentration on traditional forms of energy?
Yeah, I mean, despite, you're going to get me in trouble here. Despite
you can say what you like.
Yeah, despite the last gasp efforts, I mean, the train has really left the station on this, not just politically, I think, but economically, right? That's really where it has to win. And renewables are the least cost solution in many areas, increasingly. So, you wouldn't see corporates getting on this bandwagon at such a ferocious rate if the economics weren't compelling. And
If the numbers didn't make sense, yeah.
Yeah, and that's not to say that in every single instance companies are guaranteed to make money. The economic equations are complicated. It's not always clear what's the cheapest, but renewables are now very much in the ballpark, and combine those economics with the clear environmental benefits, the clear stakeholder benefits. You have boards and customers and a variety of stakeholders encouraging companies to go renewable. So it's really no longer a debate economically. It's no longer a debate politically. It's just that train has left the station, and sure, there's noise on the political front, but if you look at the number of renewables being installed year over year, it's just a conversation that's pretty much been wrapped up.
So why are you coming over here? Why are you coming over to Europe? And I don't know if you're coming specifically to the UK, but I definitely know you're coming to Europe. Why over here?
A few reasons. I think first, the United States companies did a number of contracts in the United States first because of our wholesale markets, and these virtual PPAs have been easier to do over here. We're a big country. There's a lot of land in Texas. There's a lot of land in the Midwest. There's, development is relatively easy here. Permitting is relatively easy here. So a lot of companies are based here, and it has just been easier and simpler to do initial transactions here. But a lot of the companies that we deal with have a global footprint, and maybe they started here, but they have operations in Europe. They have operations around the globe, and they want to buy power in regions in which they operate.
Obviously, you have this demand in Europe from your current customers who are multinationals, as you say. What are you looking at here? Are you looking at finding the assets in Europe, or have you already identified them? Are you looking at just basically trying to get the awareness of this kind of platform? And what would you be able to offer, and what sort of size companies could participate in something over here? Because obviously we have a very developed sort of renewable market in the UK. We have a lot of commitment from the government for cleaning up. It's replicated across Europe, irrespective of whatever happens with the Brexit argument. And there's a lot of assets being closed down in traditional energy, and a lot of new assets being built in renewables. So who are your potential customers over here, and what assets would they be buying into, and which ones are you sort of looking at?
Yeah, so first off, we think about both sellers and buyers as customers. So the project developers themselves get on the platform. They upload all of their assets under development. We have power buyers as customers as well. So both sides get a lot out of participation. Otherwise they wouldn't show up. And two-sided marketplace always needs both supply and demand to function well. So suppliers upload their assets. They get a lot of information back. We aggregate a lot of that data and feed it back to developers kind of in an anonymized way, so they understand where their projects stack up. Are they competitive? Are they not competitive? Should they continue to invest in that asset or abandon it? And on the buy side, we have some of the very, very largest companies in the world, and then we have some medium-sized companies, still fairly large entities. But in North America, we have 150 or so developers. Every developer of assets in North America, and increasingly we have a similar number in Europe, and we already have assets on the marketplace from giant to small utility scale.
And what are you looking at? Are you looking at basically wind and solar principally? Or are you looking at other things such as CHP or other things?
Yeah, I mean, it's principally wind and solar because those are the most economic. We have some small hydro and biomass and so forth, but typically the wind and solar are the projects that get contracts because they're the most economic. Storage is also increasingly compelling. We have some very interesting storage transactions going on in the marketplace right now, which will be increasingly important over time as you can use storage to essentially shape the output of those projects. I predict over the next couple of years we're going to see some major innovations on the storage front contractually, which is interesting.
And in terms of your money, I assume the money you get is from people using the platform. They pay a fee. How transparent is that fee? How, you talk about transparency. How transparent is this business if I wanted to deal with you?
Yeah, so we have to get paid by one side or the other. We choose to get paid by the buyers because that's the most transparent way to approach it. If we get paid by the sellers, ultimately that cost is transferred to the buyers anyway. So our choice was to be transparent, get paid by the buyers upon success.
And in terms of the timescale, with technology moving on, how short do you perceive? You said it went from 25 years to 15. Now it's a kind of 10-year thing. For a lot of companies, that'll still be too long. Do you envisage the growth to be shorter assets, particularly if you're exploring storage? Storage could be a project that's very quickly created and run and has a much shorter timescale. So your potential for when these sort of projects could be come into fruition, do you think the timescale is going to diminish?
I certainly think it will diminish. I mean, really, this is about what does a project need to get financed.
Yeah.
And if as a buyer you want to make a new project happen, that means your financial commitment is instrumental to the cash flows that allow someone to finance and build a project. A 1-year purchase of power is really insignificant for a 30-year asset, right? So
sure.
Will we get south of 10 years? Very, very likely. Are we going to get to 2 years? If you want to make a new project happen and claim that your purchase did it, it's not going to be a 2-year procurement. But we will certainly see contracts between 5 and 10 years. And I do think we'll see the industry relax that definition of additionality, where, look, we want companies to participate any way they can. If that's not a 15-year commitment, if that's a 7-year commitment or a 5-year commitment, that is valuable. And as an industry, we need to allow those types of companies to participate as well and not call their procurement not meaningful.
Finally, what do you think about the UK energy sector? Have you looked at it? You must have looked at it. You're a businessman. You're gonna come over here. What's your view of how UK energy is doing in particular?
Yeah, we've looked at a variety of markets in Europe, and UK is one of the most intriguing. for sure.
Intriguing. I like that.
It is intriguing, and it's one of the more mature
Yeah.
markets, and it is relatively easy to transact in the UK, which is nice. Obviously Brexit has us kind of scratching our heads and wondering what the twists and turns might be over the coming months and years, as I'm sure you wonder as well. But it's certainly a mature.
It doesn't stop us being an attractive market, though.
It does not. It does not.
Yeah.
I mean, there's no doubt that renewables are going to be a part of the UK market going forward, and in a very important way, and a really important part of the broader European market going forward. And it's a place we have to play if we want to be part of this global procurement trend that we're seeing on the corporate front.